But of course, the big story is the rate cut story, and Shweta Rajpal Kohli joins us for all about that.
Thanks very much, Sunetra. Yes, a rate cut and a deeper or a more aggressive rate cut than what most people had expected. That's what RBI Governor Raghuram Rajan has delivered today for the economy and for consumers like you and me. But what does it mean for us? Are we going to see our home loan rates coming down? Will EMIs come down or not? That remains the key question, and that's something that the RBI Governor tried to address today in his media conference today, where he said that the focus for him here on will shift to working with the government and ensuring that banks are actually passing on this rate cut to consumers. In fact, since the beginning of this year, we've seen the RBI cut rates by 1.25% and all if we include today's 0.5% rate cut. But banks have transmitted only 0.30% of that. So the focus really now will be to ensure that banks are transmitting this rate cut, home loans come down, EMIs come down for all of us. But first, let's listen in to the reasons why the RBI governor felt he had enough room to go ahead with a bigger rate cut than what most people had expected.
Sure that the word sustainable and growth go together. Both are important. And that's why, we used what room we had, but I don't think we were excessively aggressive. We weren't sort of throwing out a Diwali bone. I think this is more, I shouldn't say bone with Diwali, the Diwali present. But really this was about, given the state of the economy, how can we move it forward?
Should it be read as a hawkish statement followed by a dovish policy?
I don't know what you want to call me. Santa Claus is what Lata called me earlier. You want to call me a hawk? I don't know. I don't go by these things. My name is Raghuram Rajan and I do what I do.
All right. So Raghuram Rajan there saying that he might be a Santa Claus. This might be the perfect Diwali gift that he's given to the people of India, but he decides to do what he does, and once again surprising markets. Markets clearly have responded positively to all those developments. Remember, markets were under huge pressure. They were down, especially at a time when we are seeing global developments continuing to weigh heavily on financial markets across the globe. But this definitely coming as a huge positive move for markets that had priced in only a 0.25% cut or 0.25%. But Raghuram Rajan is always known to surprise markets, and he's done it once again by going ahead and using the maximum room available for him to go ahead with that rate cut. Finance Minister Arun Jaitley also spoke with the media shortly after the governor's press conference and announcement, saying and echoing the views that he had expressed that it's now up to the banks to transmit this rate cut, and also adding to the fact that the rate cut will be a huge boost, bringing about a positive sentiment in the economy. Let's listen in.
We are looking forward now to the transmission of these cuts. Which will effectively help to boost confidence and investment. They will also help to realize the economy's medium-term potential growth rate.
All right, Shubha Rao, Yes Bank now joins us to understand what this rate cut really means for consumers and for the economy. Shubha Rao, first to get a sense from the kind of transmission that we can expect. Transmission really, if we could simplify it for our viewers, RBI has cut policy rates, but will banks cut down their rates to make home loans cheaper, to let our EMIs come down? Now, the RBI governor, when asked how much of a transmission he really expects, went on to say, I expect the entire rate cut to be transmitted. So what he's essentially saying is 1.25% is how much actual rates need to come down by, given the fact that he's actually reduced rates by 1.25% since the beginning of this year. Do you think that's practical, and do you think that's something banks are likely to do?
I think, it's going to be a process, and a slower one at that. I'm not too sure whether, the entire 125 basis points is going to come on board. I think the key hurdles to that full transmission are more to do with the larger banking sectors face balance sheet issues on asset quality concerns of the public sector banks, and also the repricing of the liability book at significantly lower rates of the money markets that prevail at this point in time. So it's going to be a process. It's going to be not a one-off event that banks suddenly cut by huge 50 to 75 basis points. Let's not forget, banks have already begun to cut rates. We've already seen a transmission of 30 to 40 bips. By some of the banks, and eventually most of the banks in the space will get on to easing of lending rates further. So I think 125 basis points may not be the quantum that we could look at immediately, but it is extremely pertinent to see how bank sector's balance sheet concerns allow them to effectively have those lending rates cut by that margin. There are some asset quality concerns on the PSU bank space, and the RBI and government are going to be working together.
Right. Right, what's important this time around is the way the governor has tried to address the issue of transmission. Of course, in the past also we've seen him, go ahead and give a very strong message to the banks, almost like a rap on the knuckles saying, I've done my bit, it's time for you to do your bit. But the fact that we had the governor actually in a forward-looking statement saying, I'm going to work with the government to ensure that we remove all impediments, all hurdles that come in the way of banks passing on the rate cuts and reducing lending rates. Just, an hour later, you had Finance Minister Arun Jaitley come on and say exactly the same thing, that transmission must come through. So the kind of almost coordinated action we are seeing now between Mint Road here and North Block is, Mint Street North Block is perhaps an indication that yes, both the government and the RBI mean business. They want actual lending rates to come down, and perhaps this time around banks may not be given much of a choice. Now, if we actually see some bit of arm twisting happening, the government asking the PSU banks to bring down rates, it will naturally fuel a process where everyone will have to follow suit. Shubha.
Shweta, I don't think there would be any arm twisting, because let's face it, the problems for the banking sector are real problems. It's not that the banks are just making a big noise about it. There are genuine concerns on some of the exposures that have been a legacy kind of issue, and because of the global conditions what they are, and the commodity disinflation or deflation for that matter. So these concerns are real, these problems are real, and I don't think there is any arm twisting kind of a tactic, but a general acknowledgement on both RBI's and the government's part that why the banks have not been able to fully transmit the policy rates into lending rates is because at the end of the day the banks also need to preserve some degree of margins. At the end of the day, you also need the PSU banks getting capitalized, which will be in a way based on some performance indicators and some real concerns about what exposures they have. So I think more than arm twisting, I would think it is more a hand holding of the banking sector in a more together manner, in a more concerted and coordinated manner. And I think it's a matter of time that these issues of cleaning up the balance sheets are affected by both the policy makers in Delhi and Mumbai.
Right, Shubha, and it's important also, as you mentioned, that this transmission comes through rather quickly. Remember, we are now almost in the midst of a festive season. Many are calling this rate cut by the RBI governor a Diwali gift in many ways for the people of India, because if we see rates actually coming down, it would give a boost to the real estate sector that has been reeling under huge stress. We're seeing huge unsold inventory of homes lying. People are simply not buying. Demand is simply not picking up, and which is why it is important for that demand to really pick up, and rates is seen as one major factor which will help bring about that boost. Break it up for our viewers what this rate cut will really mean in terms of boosting that demand, in terms of boosting private investment on part of the industry, and for the economy overall.
Yeah, I think it's not just real estate. Real estate, we still can see a scope of, the effective prices coming off lower. But yes, a decline in policy rates, a reduction in policy rates definitely will help in easing those rates and spurring consumption demand, at least on the real estate. But looking beyond real estate, I think overall, consumption will also get a boost if other consumer durables and other spaces also see a reduction in rates. We have seen in the recent IIP data over the last couple of months particularly that consumer durables have begun to pick up. So some lowering of rates will definitely preserve and protect and rather push the demand up. But a broader story for entire consumption spaces, on a more sustainable manner, how are we able to revive investments, create jobs, create steady incomes, and therefore spur consumption on a more sustainable basis. Let's not forget that government has pretty much clearly articulated that it's not going to extend fiscal stimulus and just to rev up consumption. Right. So it has to be done on merit basis, the long sustainable route of investment-led job recovery and consumption support.
All right, investment-led job recovery, and that's exactly what both the RBI and the government are looking forward to. Sajid Chinoy of JP Morgan also joins us now. Sajid, a huge positive surprise, a pleasant surprise there from the RBI governor. What, according to you, prompted it, the decision to go ahead with a 0.5% rate cut rather than quarter, which is something that most people were actually expecting?
That's right. This was a very big surprise. I think there were two factors, Shweta, that prompted it. One is I think the RBI is far more downbeat about global growth. If you think about their description of a global stagnation, they worry about what's going to happen to global growth and in particular emerging markets on the back of what's happening in the Chinese economy. And that gives them more conviction that global commodity prices will remain benign, which helps India's disinflation. So I think that was one big driver compared to August. The second big driver is good news actually, because the RBI seems more and more convinced about the government's food inflation management efforts. That you've had two successive bad monsoons, the monsoon deficit is 14%, but we haven't seen broad-based pickup in food prices. So I think both those factors, greater confidence that food inflation remains low and more concerns about global growth, I think prompted the move to 50.
Right, I've been talking to Shubha Rao essentially about what next, because in many ways the RBI statement clearly says we've done our bit, hold on now, we'll wait and see what happens, but our focus now will be to ensure the transmission really goes through. And he is clearly one RBI governor who's talked about the transmission more than ever before, because in the last or the policy before that, he almost did tell the banks, why is it that you're not cutting rates when I am cutting rates? This time around, once again, he said that my focus over the next few months will be to work with the government to remove all the hurdles to make sure banks are actually passing on that rate cut to consumers. I was talking to Shubha, how much of a transmission do you expect will happen? For instance, will we see later this evening bank after bank making that announcement of their rates coming down? How quickly and how much of a transmission can we expect for consumers?
I would hope and I would expect that to happen, Shweta, because otherwise this is an academic debate. The RBI can keep cutting rates all it wants, but you and me and consumers and households and economic agents will not experience any of that. And I think one of the other reasons they've spoken about front-loading this rate cut. So I think they expected to do 225 basis point cuts. Instead, you've got 150 basis point cut, precisely to put pressure on banks to transmit it. I would expect, if not today, in the coming days and weeks, banks will respond. I think there'll be a lot of pressure from the government as well, and we will see more transmission. I'll just make one final point. I think the transmission is important, not just because you want activity to pick up, but you want investment to pick up. The RBI has already spoken about consumption picking up. What we don't want is a consumption-led recovery. You want investment and the cost of capital to go down so investment picks up.
Absolutely, Sajid, and if you had been talking to any industrialist in the run-up to this policy and asked them what's the one impediment, what's the one thing that's stopping them from making investments, they would all say high interest rates. And now, of course, with that 50 basis point rate cut, industry should be happy, markets should be happy, consumers like you and me should be happy if the banks decide to respond to that big surprise rate cut. Sajid Chinoy, Shubha Rao, many thanks for joining us and sharing your perspective on RBI's decision to cut rates by 0.5 percentage points. That's all from me here.